Coming up on Market to Market, H5N1 is discovered in a new animal in Oregon, gathering worldviews to work on feeding the planet, and commodity market analysis with Arlen Suderman next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors. New parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, November 1 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. H5N1, or bird flu, has already jumped from poultry to cattle, and this week it moved to another species. USDA reported a case in Oregon involving one pig in a backyard herd. This is the first time the virus has been detected in U.S. swine. Investigators say the infected animal shared water and shelter with poultry found to have the virus. The USDA also says public risk to humans remains low and there is no risk to the nation's pork supply. Now, to the economy and this week's financial report. Friday's job snapshot revealed 12,000 jobs were added last month as the effects of hurricanes and strikes impacted hiring. The government also adjusted the previous measure lower for August. The unemployment rate held at 4.1%. The government's favored inflation reading, the PCE, showed a 2.1% year-over-year gain in September. The core report removes food and energy prices and added 2.7%. As the number of people on the planet grows, new responses are needed to answer the challenge of making sure everyone is properly fed. This week, one of history's most influential food production scientists was celebrated with a series of speeches, seminars, and discussions, all focused on feeding the expanding population of the world. David Miller wraps the week with a focus on one huge new market, Africa. His work is our cover story.
The 2024 Borlaug Dialogue took place in the heart of corn and soybean country this week, turning most of its attention to global food issues. The annual gathering was started to continue the work of Iowa native Norman Borlaug, the father of the Green Revolution.
Let us reflect on a major paradox of our time. In the midst of extreme abundance, there is yet so little, particularly within the context of food. So, as we come together with a single vision for a world where every person has access to one of the most basic needs of all time, food, let us keep this within context.
The World Food Prize is considered by many to be the Nobel Peace Prize for agriculture. Africa was the center of two major panels, as the future of the continent and its growing young population may soon pass 2.5 billion people.
We bring leaders, and we will continue, Ambassador Brestad, to bring African leaders here every single year so that you can continue to hear from us what we are doing. And also, I want to have an echo chamber in heaven for Dr. Bullock to continue to hear that we are actually listening to what he said, and we're going to continue to make progress.
And so it was a wonderful trip.
Africa has been a source of partnerships, including for Tom Vilsack, who, when he was Iowa's governor, made trips to Africa. Now, as head of USDA, those missions are larger in scope.
We are aggressively investing now, the U.S. is, in Africa. We've had trade missions, a number of trade missions, recently Angola, Tanzania, Kenya. We've had hundreds of participants in those trade agreements traveling from the United States, producer groups, agribusiness, basically creating relationships and developing opportunities for investment both in Africa and for purchasing American products in those countries.
Vilsack says Africa provides a large number of opportunities for U.S. farmers.
One half of the increased population in the world over the course of the next several decades, one half of it's going to come from the African continent. And it bodes well for us to understand each other in order to help those countries mature their economies, create middle classes, create farming and production agriculture that's capable of helping produce the food to feed their people. The ambassador is absolutely right about this, and it's very simple. If you look at all the hot spots in the world today, what you're going to find is there are hungry people there. And if you feed the people, there's a much greater chance you're going to have a more stable and peaceful place. And so I think it's just important for us to really focus on that continent. I think there's tremendous opportunity there.
When Dr. Borlaug initially started his trips to Africa, he felt the private sector needed to lead in this effort. The U.S. State Department also sees these partnerships as paramount for this form of agricultural diplomacy to be successful.
You know, I think the public sector and the private sector can complement each other in such incredible ways. And when it works beautifully. I think R&D is really an embodiment of that. There are so many places where well-chosen, targeted public investments in long-term agricultural R&D have been able to galvanize work that maybe the private sector didn't have the appetite for early on.
It's really about, how do we develop biofortified crops that are delivering better results in terms of yields and incomes for farmers and better soil health for long-term longevity of their farms, but also nutrition benefits to meet specific micronutrient needs in their specific countries to address the global problem that we have 2 billion people facing hidden hunger, which is micronutrient deficiency.
The 2024 World Food Prize laureates, Dr. Jeffrey Houghton and Dr. Carrie Fowler, were also a part of several Borlaug sessions, both on stage and at press events.
We are very concerned about food security, nutrition security, and the connection between that and national security. Not just U.S. national security, but everybody's national security. There's historically been a connection between food insecurity and conflict around the world. And we know that nutrition drives health outcomes, and that health outcomes, in many cases, drive politics, drive migration, for example. So we're concerned about trying to help countries develop more sustainable, productive agricultural systems that feed everyone all year round.
But there is still a long way to go. There's still a lot of material that needs to be conserved. Svalbard is a seed vault. It conserves seeds. A large percentage of our crops cannot be conserved as seeds. We've got yams, we've got sweet potatoes, bananas, some extremely important crops that you cannot conserve as seeds. We need to work towards a similar safety net for all the collections of these crops as we have for seeds in Svalbard.
For Market to Market, I'm David Miller.
Next, the Market to Market report.
A big dose of rain slowed the waning harvest, while some buying showed up just before the weekend. For the week, the nearby wheat contract lost a penny, and the December corn contract cut a penny. Soy meal was under pressure, while veggie oils rose and the soy complex moved lower. The January soybean contract dropped 4 cents, while December meal fell $10.50 per ton. December cotton shrank 51 cents per hundredweight. Over in the dairy parlor, December Class 3 milk futures fell 50 cents. The livestock market was mixed. December cattle decreased 322. January feeders cut 243. And the December lean hog contract added 440. In the currency markets, the U.S. dollar index improved 7 ticks. December crude oil weakened to 207 per barrel. COMEX gold lost 10.40 per ounce. And the Goldman Sachs Commodity Index dropped just over 3 points to settle at 540.80. Joining us now is one of our regular market analysts, Arlan Suderman. How you doing, Arlan?
Doing well.
Let's talk about wheat country, shall we? Drought to start the week. Major rains come through with more rain on the way. So the wheat crop had already died once. Does this bring it back, and does it bring the market back to life?
It's got 8 more lives. So
that's right.
We're missing out Colorado, western Kansas, the southwestern plains. That's become all too frequently true. But much of the winter wheat belt is getting a boost. And we'll take the rain where we get it. That rain's coming up into the Midwest and doing some benefit there as well, reaching into the eastern Midwest. So that's a positive for wheat growth. Does that mean that we tank the wheat market? I don't think so, because we still have problems in Russia, Black Sea region. They've had some showers, but they haven't solved the drought problems there.
Do you get the sense that this market, the way it didn't react, that Russia still is the big bearer on this market?
It is. When I've looked at correlations, statistical correlations, U.S. wheat prices on the board correlate more to Black Sea fundamentals than they do to U.S. or to European fundamentals, which are related there. And I anticipate that'll continue to be the case. And also, if you look, these winter wheat ratings, the first that came out, were the second lowest in history, going back to 1986 when USDA started. If you go back to the lowest was 2 years ago, and we ended up with a trend yield. So it's spring rains that matter more than fall rains.
That sounds familiar. I've heard that in corn and beans. It happens in wheat country too. What are you hearing about producers who are they making any sales right now?
We have seen some sales on rallies. I think farmers have been paying attention to the fundamentals, particularly on soybeans, and they see that South America is getting the rains now and is on track for a big crop. I know our StoneX survey, 1st of November, raised their production estimate 1 million metric tons to 166 million metric tons. That's still one of the lowest estimates in the industry. So there's more upside potential. That's up from 149 last year. And so that looks like a big crop. They're storing the corn, locking the bins for the most part where they can, and wheat, what they were going to sell, they pretty well have sold now.
You can't use locked bins to talk wheat. We got to save that for corn and beans here in a minute, Arlan. Let's look at corn for a minute. Same story with weather. Harvest is going to probably be well over 90% come Monday. Today's also the first day of the month of November. Which was the bigger factor this week, do you think, in trade?
I think we're seeing reduced harvest selling. We haven't found a home for every bushel yet, and we have some huge piles out there on the ground. We're putting it about everywhere we can, but particularly with these rains coming, I don't think it's particularly a production problem yet, but it does slow. It gives us time to find homes for these last bushels coming in. That should ease a little bit of the basis pressure in the country from what it would have been overall. And of course, we love having the rain. We'd like to see the Mississippi River levels come up, see those soils get more saturated. Unfortunately, northwestern areas of the Midwest are going to stay dry.
I want to go back to something you said right there at the beginning. So are you in the camp of there are corn piles out there?
There are definitely some piles out there of just about everything. Sometimes they're corn piles, sometimes they're bean piles, sometimes they're wheat piles made so that they could have room for corn and soybeans. So we have some big piles out there this year.
In terms of harvest pace, did that contribute more to the piles than the volume of the crop?
Obviously, both were a factor, but I think the pace was the big factor. We just didn't have time to move it out as it was coming in. This crop dried so fast because of the dry weather pattern that we were in that farmers were worried about losing bushels just simply from being too dry and drying too fast. And so they were bringing it in just as fast as they could.
I just looked at that March chart, and it made me think I kind of needed to add one more about that December. Do you see technically this bottom of, I think it was called the 390 flush? I mean, do you see a technical fall coming in that December contract here?
Obviously, nobody rings a bell in Chicago when you hit the high or hit the low, so anything is possible. But based on what we now know, I'm feeling increasingly comfortable at the low as in on corn. The question is, when do we pull out of this? How long does that take? Frankly, long term, it'd be better if prices stayed low for a while before they make their planting decisions in South America for their safrinha crop. But I do feel like we're going to see stronger demand that helps lift things as we go in the last half of the market year, and we're already seeing that strong demand.
Keep prices low to force Brazil to plant less?
Less. Mm-hmm.
Okay. With the price moving in the direction, did you get the sense that, again, use the word muted like I used in wheat, that this thing didn't go any lower, that's why you feel so strongly about the bottom being in?
I think a lot of the concern was how big is the crop? We priced that in. How fast is it going to come in? Storage issues and stuff like that. But you have to look at this in the context of what's happening around the world. First of all, the Black Sea had a short corn crop. Then Argentina's planting 20% plus or minus fewer corn acres this year. So there's their number 3 and number 4 exporter. The Brazil soybean crop going in late doesn't hurt the soybean production necessarily, but it does put their winter corn or safrinha corn crop at risk. And so a lot of things starting to come together, and then you add in reinflation concerns. If you look at the 2-year break-even inflation rate, it has really spiked over the last 6 to 8 weeks. And so the funds don't like to be short the commodities. Soybeans, they are starting to rebuild shorts because they just have bearish fundamentals, but corn now, we're starting to feel a little bit better about it. Not bullish, but we're feeling a little less bearish about it.
How do you feel about beans? You feel bearish on them?
It's really hard to have a positive story on beans. If I'm going to look for it, it would be in soy oil, what we've seen. We've seen a spike in export demand. We're seeing a spike in palm oil prices that are helping hold up soy oil. Strength in crude oil has been a factor there as well. And soy oil long-term needs to have those 45Z requirements really laid out. And we're starting to see a lot of domestic producers simply not want to buy until they know what those are. That's hurting domestic demand. That's why we have soy oil available to export.
Do you get the sense that you talked about money coming back into commodities, is there anybody coming back in right now?
What we've done is unwound the short positions.
Okay.
And we did it last spring when there was reinflation talk, and then we saw inflation kind of die down once again. And then this fall, we've seen reinflation talk come back, and they covered the short positions simultaneous to having some good export demand, both of those things working together to help hold this market up. We don't have the fundamentals to sustain a rally right now in corn or wheat, definitely not in soybeans. But it was less bearish and it helped the funds go ahead and unwind their short positions. Now let's see if they actually build any ownership. I'm not convinced we have those fundamentals at this time. There are some scenarios that could develop to cause that down the road, but right now I think we're defining a broad sideways trading range.
Let's look at some 25 things. I think Phil in Ontario wants us to do that, so let's do it now. With harvest in the rear view for most, how do we initiate marketing for the 25 crop? With Deese 25 corn at $4.42, November beans at $10.38, it's not that joyful. What do we do to what do we look ahead at?
I've been in this for more than 4 decades, and I've seen a few cycles, and unfortunately, the downside of those cycles are very painful. And until or unless we see a significant change in dynamics, I think we continue to go through this painful cycle. And when you're in that, we just coming through the World Series. We back away from trying to hit home runs like we've had the opportunity in recent years, and you start going for base hits. Where can I get the little victories, whether it be basis or pricing on the carry? We look at the premium in those deferred contracts versus the carry in the market. We look at soybean fundamentals and that 1038, I think you said, that could be much lower a year from now. And so we may not like it, but there are things we can do to keep the top side open, some tools that we can use to do that if you think that that may happen, or have a plan in place what'll trigger to rebuy it. But take advantage of that carry, because when you have a lot of carry in the market like that, that's not bullish, that's bearish. That means the market is saying we have too many bushels, we don't want you to deliver now, keep it in storage until later, maybe we'll need it, and then it just keeps ratcheting down as that time moves forward.
Well, let's go back to what you said about corn then. If we keep this price low here and we discourage the Brazilians from planting so much corn, what are they going to plant? They're going to plant beans. Well, which, right? And that would further exacerbate what you're talking about?
Except we're talking about a year-round crop. Okay. So where they plant their soybeans, they follow the harvester with a planter to plant winter corn. And so if their costs are too high to plant that, they can pull back on how much corn they plant behind their soybeans. In America, we call it double crop. There, they call it safrinha, or the winter corn crop. And that's their big exportable corn.
All right, fair enough. I just want to make sure I get that right. Let's talk livestock, because there was a moment in time this week where we were unwinding that market. Cattle on feed last week, we responded to it pretty neutral on Monday, but then kind of gave some things back here on Tuesday, Wednesday, Thursday. Is the high in cattle here?
The cash market hit 190 this week. We saw good movement at $190. But on the board, you look at that December contract, I know the continuous high is 193, but the 190 on the December contract, every time we've been up there, and we've been up there about 3 or 4 times, the funds just don't want to go through that, and they sell off. And when they sell off, the board drops. Those feeders who have hedged see some basis opportunities to sell, that drops the cash. The cash held up this time. And so I guess we're going to have to see that cash actually push higher and sustain a move higher in order to pull the board up with it. But we've been very impressed how well the demand has held up. And even though we had a terrible jobs report on Friday, the consumer confidence index that came out this past week was very strong, a massive jump, the biggest we've seen in many years, showing the consumers willing to spend. We've had several other reports showing them spending as well. So that's good for the cattle industry, showing the consumers willing to continue to pay up at this point. Steer weights up 10 pounds, record high for any week of the year. Heifer weights up 3 pounds. At Cattle and Feed report, heifer numbers down 1%, steers up 1% from a year ago. That's not rebuilding yet. We're still not there.
So if cash has become the winner, I get in cattle, in feeders, has it been more futures this week that has gained the interest?
Yeah, it really is. And I think that does reflect some demand. They're thinking, if the cash is holding up this well, we're seeing these fundamentals hold up better than we expected. And you look at the whole protein complex, you look at the supply of pork product, and the hog numbers have not been what USDA said. This may be one of the biggest misses in history for the last quarterly hogs and pigs report. So the numbers aren't, we're slaughtering 2.6 million hogs per week, and yet we're holding the cat out of over $100 per hundredweight. That's pretty impressive, both domestic and global demand. That's helping hold up the cattle demand as well.
The hog market, another part of that, what we talked about on the top, this H5N1, it was a backyard flock, 5, not a confined situation. Is that doubt, if it could go to a more confined situation, create unease in the market?
Anything like that can, if there's not good education with it, it can create it. But at this point, we don't see any risk to the hog health, really. The hogs weren't even showing symptoms. I think the bigger concern, and this is extremely low, is the mutation that can happen between a hog and the bird flu that can be transmissible to humans, and that's simply no significant evidence that that's there yet.
Well, APHIS came out with news on it very, very quickly, and they clearly want to make sure they're ahead of this story.
Yes.
It's kind of crowded. There's this election thing going on. Do you think, in 30 seconds, has any money gone to the sides until this election sorts out next week?
I think the choppiness of the grain markets over the last week to 10 days is really indicative of a market full of uncertainty, and the elections are a big part of that.
Do you think that money... we could do a whole plus on if something falls quickly one way or another, but is there a certain reaction that we expect?
I'm just saying the corn charts right now in a corkscrew formation, which usually is indicative of a significant move one way or the other.
Fair enough. We'll explain that one in a little bit. All right, Arlen, good to see you again. Thank you so much. It's Arlen Suderman. And we're going to pause this analysis, continue our discussion about these markets in our Market Plus segment. You can find both analysis and plus on our website of markettomarket.org. We have launched the Market Insider newsletter, and we want you in our club. Each Monday, we deliver inside information about the program, as well as info on what's ahead, and only insiders will get the first read of the information. Subscribe at markettomarket.org. Next week, a small insect makes a big impact on the landscape. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors. New parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.